ABBV just jumped 6%, and that's the kind of move that catches traders' attention. But while pharma's flying, streaming stocks are getting hammered, and the Nasdaq's sending a mixed signal. So what's actually driving the splits we're seeing out there? Let's find out what it means for you. Let us start with the indices. All right, so the Nasdaq had a rough day today, down 1.32% to finish at 26,166. That's not ideal when you're looking at a solid week up a little over 1%. Here's the thing, you've got tech getting pulled down, especially streaming and cloud plays, which tells me we're seeing some profit taking after that weekly gain. Probably some rotation happening into other sectors right now. Now the Dow, that's a different story. It actually eked out a small win, up 0.29% to 51,712. So we're seeing a pretty interesting divergence here. The Dow's holding steady while the Nasdaq's retreating, and that usually signals investors are getting a little more defensive, moving money into big established companies instead of staying aggressive in growth tech. The Dow's weekly is solid though, up a full percent since last Tuesday. Now here are the top movers of the day. ABBV, that's your big winner, up 6.25% today to $230. The weekly's modest, just up 1%, but that daily move is substantial, likely driven by some positive news flow around their pharmaceutical pipeline or maybe some analyst upgrade. Pharma's had a good run, and ABBV is one of the blue chips in that space, so it's catching some tailwinds while growth tech gets sold. Netflix, on the other hand, yeah, that hurt. Down 5.82% today to $72.88. The weekly picture is even worse, down 9.29%. Streaming's taking a hit this week, and it looks like there's some concern about either subscriber growth, content costs, or maybe just profit-taking after a strong run. Traders are rotating out of high-momentum names like Netflix into more stable, value-oriented plays. Lam Research, though, that's a bright spot in semiconductors. Up 5.27% today to $409.54, and that weekly's been strong too, up 11.73%. Chip equipment makers are benefiting from AI infrastructure, spending, and memory chip demand. Lam's a supplier to the suppliers building out data centers, so as long as AI capex keeps flowing, they stay in. Oracle took a 5% hit today, down to $1.7507. And the weekly's rough, down 4.92%. Cloud and enterprise software is getting pulled back along with the broader tech sell-off. There's probably some concern about corporate spending or maybe some profit taking on a stock that's had a decent run. Oracle's a big position in a lot of portfolios, so when it sells, people notice. Google closed down 4.99% to $349.68. The weekly's down 2.78%. Alphabet's getting hit with the broader tech pullback and probably some concerns about advertising demand or search trends. It's not as dramatic as Netflix, but it's a signal that mega-cap tech is being rotated out of. When you see Google, Oracle, and Netflix all down on the same day, that's a coordinated shift away from big tech. Now let us look at energy and fuel. Oil took a hit today. WTI crude slipped down 3.25% to $74.11. But here's what's really catching attention. The weekly picture is rough, down 12.7% over the last 5 days. That's a substantial pullback. You're probably looking at a combination of demand concerns and maybe some easing geopolitical tensions given the U.S. and Iran peace talks that started today. Supply's not tight, and traders are pricing in softer economic growth. Natural gas actually bucked the energy trend, up 0.93% today to $3.26, and it's been climbing all week, up 4.49%. So you've got divergence inside energy itself. Natural gas is benefiting from seasonal summer demand and probably some storage concerns as we move into the hot months. It's not following crude down, which tells me there's real physical demand for gas right now. Moving on to metals. Gold dipped today, down 0.34% to $4,209.60. But the weekly move? Barely anything, down just 0.1%. And that's actually telling you something important. Gold's not reacting much because it's not in panic mode. When you see real safe haven demand, gold rockets. This move says the market's worried, but not terrified. There's some anxiety baked in, but investors aren't running to the exits yet. Silver's getting hit harder though, down 1.6% today, and the weekly damage is more significant, down 3.93% over the week. So silver's diverging from gold here, and that usually means industrial demand is softer. When investors are nervous about manufacturing and economic growth, silver pulls back because it's seen as more of a growth-sensitive metal. Gold stays stable, but silver takes the hit. That's what we're watching today. And finally, let's look at tomorrow. So here's what we're watching heading into tomorrow. No major events on the calendar, which means this is going to be about sentiment and follow through. If we see the Nasdaq stabilize or bounce, that tells us today was just a speed bump. If it keeps sliding, we're probably looking at a deeper rotation out of tech. Watch for any Fed commentary given all the talk about Kevin Warsh reshaping the Fed's direction that could impact sentiment. And keep an eye on earnings if any big names report overnight. The cross currents are real right now, but that's actually where the best opportunities live for traders who know what to look for. Stay sharp out there. For your daily market update video, don't forget to hit that subscribe button and turn on the notification.